Okay, Bismillah ar-Rahman ar-Rahim, Alhamdulillahi Rabbil Alamin, wassalatu wassalamu ala Rasulihil Kareem. Assalamu alaikum, welcome back. Thank you to everyone who's made it to the start of week 4. I know it's not easy getting up early on a Sunday morning, and some of you have traveled from very far places. Particularly appreciate those of you who've made a sort of, 3-hour round trip from parts of London. This is the last week, inshallah, and we're going to consolidate all the things that we've been talking about for the first 3 weeks, and then we're going to talk about the future direction of Islamic finance. So I'm going to start with a little story, and it's the story of the Mexican fisherman. And some of you may know this story. It's quite a famous one. Sometimes it's told in different settings with different protagonists, but the version that I know goes a bit like this. An American businessman is stood at the pier of a picturesque coastal Mexican village when a small boat docks at the pier. This lone fisherman steps out with a catch for the day. It's several large yellowfin tuna, and the American compliments the Mexican fisherman on the quality of his fish. And it says, "How long did it take you to catch these fish?" And the Mexican says, "Only a short while." So the American says, "Why not stay out a little bit longer and catch more?" And the fisherman says, "I have enough to support my family's needs. What will you do with the rest of your time?" says the American. And then the Mexican fisherman says, "I sleep late, I fish a little bit, I play with my children, I take a siesta in the afternoon, in the evening I stroll into the village and I sing songs with my friends." And the American scoffs at this and he says, "I have a Harvard MBA and I work as a management consultant for McKinsey and I can help you." And the fisherman says, "Senor, how? How can you help me?" And he says, "Spend more time fishing. With the proceeds you can buy a bigger boat, and with the catch from the bigger boat you could buy several boats, and eventually you'd have a fleet. And instead of selling your catch to a middleman, you would have the power to sell directly to the customer, eventually opening your own canning factory. And you would control the product, the processing and the distribution. You could leave this small coastal village, you could move to Mexico City, and after that you'd move to Los Angeles, and then eventually New York, where you would run your expanding enterprise." And the fisherman says, "How long would that take?" So he says, 15, maybe 20 years. "And what about after that?" "Well," says the American with the Harvard MBA, "this is where it gets really interesting. When the time is right, you would announce an initial public offering, an IPO, and the company's shares would be sold to the public, and you'd be rich, you'd make millions." "Millions, senor. Then what happens?" He says, "You retire. You move to a beautiful coastal village where you sleep late, catch a little fish, play with your children, take a siesta, and then in the evenings you can stroll into the village and enjoy your drinks and songs with your friends." So this is a cautionary tale. I mean, we all understand what it means. We live in a world that's defined by GDP, this blunt measure that I talked to you about that measures exchange value of goods and services, not the experiential value of our lives. Okay, so let's have a recap of the previous weeks. We talked about what is prophetic economics. Let's have a definition of what is prophetic economics. Anyone? Come on, I know it's early.
Basically the principles of buying and selling, trading, a fair playing field where you're allowed to buy and trade and make money without creating money from nothing and creating an unfair playing field.
Yeah, trade is halal, riba is haram. So the absolute basis is the word trade. And that's something that we've lost in Islamic finance. Everything is about financialization. It's about the proliferation of debt and debt-like services through Islamic banking. So that's prophetic economics. It's based on the real economy, real goods and services, not pieces of paper that we shuffle around a stock exchange. What is riba? Who has the definition of riba? Yep. Interest, excess, surplus.
I was going to say the same thing.
Yep.
Made of money,
Yep. Yeah. So literally the word means surplus, and we've come to think of it as meaning money on money. But actually, it has a much wider definition, and it encompasses a whole range of unethical practices. So we've talked about riba. There were two types of riba. we talked about the history of Islamic finance. We started with 1963, which was the first modern experiment, which was Mitghamr, this town in Egypt where a famous economist set up a sort of social savings institution that invested money from local depositors into a mudaraba account. Remember this concept of mudaraba, this investment management arrangement where one party is the mudarib, the manager of capital, and the other party is the rab al-mal, which is the investor of the capital. So this arrangement is real trade, because the party that's managing it is managing a real trade with that capital. So we talked about this experiment that started in 1963, how it morphed into the commercial banking industry in 1975 with the creation of the Dubai Islamic Bank, followed by, well, at the same time, Islamic Development Bank, a multilateral, and eventually working its way through the Malaysians in the 1980s, Deutsche Bank, which I thought was a key period in the early 2000s, and this doomsday fatwa that I talked about, the standoff between Sheikh Hussein Hamid Hassan on one side and Yusuf De Lorenzo on the other, and Yusuf De Lorenzo claiming that you've created this doomsday fatwa, which will allow you to replicate the return of any financial instrument in an apparently Sharia compliant format. So this was a period when I think of it as sort of Islamic Finance 2.0, where it stopped being this sleepy parochial backwater, and now suddenly it's in the big leagues with this, we used to call Deutsche Bank the flow monster, because it created a conveyor belt, a flow of financial product. Billions of dollars worth of financial product were printed by this bank. And now they could apply the same technique, the same technology, the same methodologies to Islamic finance. And suddenly you had this whole universe of structured investment products and Islamic bonds, which we call sukuk, and all sorts of weird and wonderful financial instruments created on an apparently Sharia compliant basis. But this technique that we created, this black box, this doomsday fatwa, was really doomed to failure, because it was always going to be something that would be abused by investment banking culture. Because once you have a generic fatwa that your scholar says this method is allowed, the salespeople will run away with it and they'll create all kinds of crazy stuff around it. We all good, Altaf? Yeah. Do we think Islamic banks are true to prophetic ideals? Any views on that? I see people shaking their heads. Let's hear some views.
You talk about reverse engineering. So
Yep.
taking a mainstream product and just changing a few labels around and making it so-called Sharia compliant.
Yeah, reverse engineering is a good one.
No, because there's an asymmetric relationship between banks and those.
That's a good one. So banking is an asymmetric relationship. It's master-servant. It's not a partnership. One is powerful, the other is weak. We've seen perfect examples of that with the IMF and the World Bank. Anything else about Islamic banks? Yep.
They still use the Western principle about fractional reserves. So they've got the license to print money out thin air.
Yeah, they can print money from nothing.
It's not for everyone. It's not for like a common man. It's more for higher ups.
So I think that's a fair point. Yeah, that Islamic banking is not egalitarian. It caters to rich people, not poor people. It's not inclusive. I would say that that was not the intention. Certainly not in the UK. It was meant to be for local communities. And what has actually happened is that the Gulf owners have retreated from the mainstream market here and decided that much of what they're going to offer is to their Gulf nationals who are on holiday in London in the summer, which is not a service for us. We talked about how do I invest in a halal way and what is Sharia compliance. Anyone want to give me a sort of 30-second summary of what we talked about? Anyone? Talked about mortgages.
We talk about a range of different products, from mutual funds to ETFs. Usually, for example, let's take the mutual funds and ETFs. You have screened ones, but you could argue that maybe that's not the most Islamic way possible. Maybe it's kind of going back to the reverse engineering thing. It's cleaning up some of the old companies. We talk about Warhead, for example, where they've taken companies which even maybe, for example, let's take Palantir, they've removed such companies which are...
They've applied human rights filters on top of the usual financial filters. So typically, the financial filters that are applied to stocks, for example, are, what's your debt to equity ratio? Or what's the proportion of business that's non-compliant, what activities are non-compliant. And then they have some fairly arbitrary numbers applied to that, 33% in the case of debt, 5% in the case of what's your non-compliant business. And then they say, this is allowed, this is not allowed. And it's fairly arbitrary, and it's not a perfect solution, but you can argue that it's, in today's market, it's almost impossible to have a perfect solution. You can't have zero debt, you can't have zero income that's not tainted by riba. So these are sort of pragmatic filters that scholars have applied over the last 20, 25 years. And then on top of that, you have new Islamic fintech entrants like Wahid, who have put in place human rights filters. So they have filtered out some bad actors like Palantir, for example. Anything else you want to say about investing in a halal way? What about other asset classes? What else have we talked about? Gold. We've talked about gold. What else? Bitcoin. Somebody finally said it. What else have we talked about? Property. Muslims love property. We just love it. And to be fair, it's a good asset class in many ways. It's real, it's tangible. And you can get capital gains from it, it can appreciate in value, and you can get income, yield from it. So you can earn from it. But I think we have please.
You also spoke about one Islamic product which you highly value. FIDA it was?
FIDA?
FIDA.
Yeah. So that was less about halal investment and savings. It was more about financing your house, which we are gonna come on to. Right. But just on the subject of investing in a halal way, property is something that I think as a community we're overexposed to. I think we have really, and again, it really is a good asset class. You've got to have, if you have a pension pot or a portfolio, it's a solid asset class. But we leverage, we borrow money in order to buy a property, which means we're more exposed to cyclical downturns, and property is very cyclical. So I have known many people personally who have lost their shirts over property. It's really unpleasant when that happens. But again, we're overexposed. A lot of the Islamic fintech companies that are relatively recently established are property related. And again, I support them. I'm glad that we have them, but it's not the only game in town. So I want us to think a little bit beyond that. We talked about financial hedges against Armageddon, and we talked about gold and Bitcoin as being sound money. I'm going to come on to that in a moment. Financing my home and business. If you want to finance your business in a Sharia compliant way, unfortunately, there are really no options right now. You could raise money with a venture capital fund, which is just equity. It's just taking shares of your company. And that's something that happens at an early stage. It's not something that the industry is very developed at. There's only really 2 or 3 very small angel networks, we call them. Angel investors are typically sort of something slightly beyond friends and family. So they're professional stroke semi-professional investors in small early stage companies. And they're typically not putting in millions, they're putting in tens of thousands or maybe a few hundreds of thousands. And they are financing early stage startups. So venture capital and angel clubs are starting to come through a little bit beyond that maturity profile, slightly lower risk profile. We don't really have anything. There's no such thing as small business loans from the Islamic banks in the UK. The intention was there originally that the Islamic banks would provide some kind of financing to small businesses. It never happened because it's difficult, it's risky. The banks don't like it. They have easier ways to make money. And eventually the Islamic banks just kind of decided, we can't be bothered with this market. We'll just finance the Gulf nationals when they come over. So as far as a home finance is concerned, you talked about FIDA. That's probably the one Islamic fintech that focuses on home financing that I consider to be the closest to prophetic ideals, because they are financing your home on a partnership basis. So they take a piece of your home, you take a piece of your home, and you pay them rent, actual rent, not something benchmarked to LIBOR, not something that's effectively a fixed interest rate. So I like that very much. It's been structured in a way that I think is true to prophetic ideals, and that's an example of a good quality. Remember, Islamic fintechs have been set up by young, dynamic, entrepreneurial people. Often they don't have the experience. And finance is a funny industry because it's a highly regulated industry. It's technically dense. And I've often been approached by people who say, I have this amazing idea that nobody's had before, which is I'm going to create an Islamic digital challenger bank. And I say, I literally have had this conversation a dozen times with a dozen different people. And often when people come to me, it's a marketing team, right? Which is fine. It's good to have marketing skills. But that's the only skill set that they have. And they know how to make the logo and the branding and reach out to people and how to use social media to attract people. But they don't know how to build the product itself. And I use the analogy of the Formula One team. It's great to say I'm announcing a new Formula One team. And if you've got nice logos and branding and nice colors, and you've set up your, I don't know, HR department and your in-house legal department and your accounting department, but you don't have a engine builder and a chassis engineer and a driver, then you have nothing. You've just got a shell company. And I fear that whenever in this industry people say, I have this amazing idea, I just need somebody to help me implement it. It's all about the implementation. It's not about the idea. Everybody can have an idea. So this idea that there should be a digital neo-challenger bank that's Islamic, it's been thought of 100 times by 100 different people, probably 1,000 times by 1,000 different people. Implementing it is a moonshot. It's really quite difficult. And the other thing is, I personally have lost faith in the idea of creating an Islamic bank because, we said this word earlier, fractional reserve. The business of a bank is money creation. Whenever it lends, it has created new money from nothing. 97% of all money in this economy, circulating in this economy, is created by banks in the process of lending. It's not real. It's not real money. It's digits in your bank account. Again, I'm going to come back to the scholarly debate on Bitcoin. Scholars say Bitcoin is not, some scholars say, Bitcoin is not real. It's not corporeal. You can't see, touch, and feel it. It's not backed by anything. Because they think governments back fiat money, which, as we discussed, they don't. So this idea that the digits in your bank account are real is also not true. That money doesn't belong to you. If you have to pay your builder 10 grand and you need to withdraw that cash, why are they asking you questions at the teller? It's my money. I want it. Doesn't matter what the purpose is. My money. It's my property. It's sacrosanct. Property rights. But no, it now belongs to the bank, and they now ask you questions as to why you should have your money. There's a famous case in Lebanon. I don't know if I mentioned this to you. Lebanese pound, of course, has been a horrendous currency. And people were unable to withdraw their money from banks. And there's a famous case of a lady who held up a bank with a gun and demanded to have her own money back so that she could pay her sister's medical expenses. She's holding up the bank so that she doesn't want anybody else's money. Don't worry, I only want my own money. Give me my own money. I mean, it's nuts that we're kind of all sleepwalking, in this. I'm afraid that there's this concept of a Bitcoin maximalist. Altaf, you have something? Okay. Do you need a minute? Okay. I'm going to finish this one point. So there's this concept of Bitcoin maximalism, and it's a little bit toxic, so I try and stay a little bit away from it. But Bitcoin is very much talk about how we're living in the matrix. And once you take the orange pill, this famous scene where Morpheus hands Neo the red pill, and then suddenly the world becomes clear, and he can see that we're living in a matrix and the real world is something else. I think once people realize that the money in banks is not yours and the money in banks is not real, whatever that means, people start to wake up and they say, hang on, what's happening in this world? Why is the global south so oppressed by the global north? Why do we have a cost of living crisis? Why do we have inflation? What is the Cantillon effect? And all these things that we talked about in the last few weeks. People start to realize that they're kind of sleepwalking at the moment. And so when Christine Lagarde and others say, you will own nothing and you'll be happy, and they tell you what to do, and whether your property is yours or not, whether your money is yours or not, people start to say, hang on, we need a better form of money. Now, it so happens that Bitcoin maximalists, will die on that hill that Bitcoin is the best form of money ever invented. And I have some sympathy with that, as you know. But there are potentially other solutions as well. I've been a gold bug for a long time. I think there's some practical reasons why gold doesn't work today, and we talked about those. We talked about what is money. Again, sorry, let's flip over and we'll come back to that. Yeah. Okay, good. Okay, so let's ask the question, what is money? Do you remember this? So prophetic economics to the depression. What is money? Let's have a definition. Say again?
Unit of account.
Unit of account. Medium of exchange. One more, store of wealth. So those are the sort of standard economic definitions of money. How do we think money came into being? Do you remember that book, David Graeber, The First 5,000 Years?
Is it for an alternative about favors? So like if there's two people in a
Very good.
village or need
Yeah.
opposite needs,
Yeah.
then instead of trying to find someone else, they just pay them.
Yeah, excellent. Yeah, very good.
That would be the anthropologist view, right?
Yeah.
The economist would be, it was to come away from the bartering system.
Yes, yeah. So the economist view is that originally money, we exchange goods and services through barter, but one would need to have an equal and opposite needs and wants. So if you're a carpenter and you need your plumbing fixed, then the plumber would need to have his carpentry done at the same time, which makes no sense. So economists would say we started with a barter system. That makes zero sense to me. It's just not logical. The anthropologist view is that you would have had to have a series of debits and credits, social debits and credits. So I completely agree. I think that you would have to have had some form of trust established in a community. And when you have a small community, you can remember that trust. Oh, the bloke who lives next door to me owes me a favor, so I'll make sure that I get something from him later. But once you have a very large community, you can't record those favors very easily, so you have to have something passed between you, and that's IOUs basically. And you have some method of measuring what the IOUs are. If you are on a South Pacific island, maybe the IOUs were seashells, or they were stones on the island somewhere where you put notches in them, or some other form of recording how people owe each other favors. So an anthropologist's view seems to me to be the most logical one, which is that we all owe each other and are owed favors by others. And this is how money originates, because eventually you have pieces of paper circulating in the economy saying, I owe this guy something. We talked about the social effect of high time preference. Someone want to give me an idea, what is low time preference, what is high time preference?
So high time preference is delayed gratification. You kind of want things now, and then low time preference is thinking long term.
Yeah, so low time preference is people who study hard, people who do hifz of the Quran are low time preference people. They spend years studying and remembering it. And there's no quick fix to this. You can't just download it into a chip in your head. It takes years and years of study. That's low time preference. That's delayed gratification. People who save and invest for the future are low time preference people. I think Muslims are low time preference people. We're the ultimate, we should be, because we plan for the akhirah, not for today, right? High time preference is, I want to borrow money today, I want to spend it today, and I want to consume today. I want to have nice things around me all the time, and I want it right now. And high time preference is an economic system to which we are being nudged, to which we have been nudged because of the type of money that we use. If we don't use our money quickly, it devalues. What's the inflation rate today? Anyone?
2.5%.
So they say 2.5%. I don't believe that for a second. I mean, you know that because when you go and get your Sainsbury's, your groceries at Sainsbury's, the basket that you had this year is £10 more than last year.
Because the reason for that is because they're only measuring against the last reported number.
Yeah.
But if you do it against last year, it's actually 10, 15 or whatever percent you've seen.
Well, it's not just that. It's because they're measuring the wrong things in their basket. Yeah. I mean, it must be measuring something else, because that's not the inflation rate that I'm experiencing.
There's also wages as well, just to add on that. We might have a different basket to the next person that they're measuring. No one's actually average.
So we're all different. We all have different preferences. You know, some people use petrol and some people use diesel and some people use EVs, and their costs are different. But the basket that is calculated under CPI, to me, doesn't feel that it's reflecting the average of the population. It seems to be reflecting something else.
CPI?
It's the Consumer Price Index. Yeah, sorry, it's the inflation rate. Yeah.
And they use substitution. So if something does rise in price, like beef,
Yeah.
they'll substitute it for a cheap alternative, like a soy burger.
Which makes no sense.
Assume that everyone
I
will
mean,
buy that.
yeah, exactly. Not everybody's buying that. What else? Social effect of high time preference. What does the social effect of high time preference lead to in terms of human endeavor? I'm pointing at this picture here. Do you remember this? You can't see it. In the center is the Kaaba. That is the Tower of Sauron behind it. And that's what the social effect of high time preference leads to. It means that we must boost our GDP, this blunt measure that does not measure literacy rates, suicide rates, divorce rates. Human happiness is not measured by GDP. Experiential value is not measured by GDP. GDP measures exchange value of goods and services. So the forest fire was a good example, where if you have a forest fire, GDP goes up because you've got to pay wages and fuel to get the firemen there. You've got to rebuild after the fire, but you've lost a forest. The experiential value has gone down. I think that projects like Abraj Al Bayt in Mecca are examples of high time preference. The type of money that we use incentivizes us to throw money at projects. I think the venture capital industry is a flawed industry, because venture capitalists are incentivized to throw 20 darts at a dartboard and hope one of them sticks. And that seems to be a crazy way. Yes, we need to fund innovation. Yeah, we need to give startups a chance. We need to have some mechanism. But when our money is devaluing at perhaps 10% per annum, even the strongest currencies, then that tells me that we must be incentivized. It's human nature to throw money away, to spend it. And if we can get low interest rates, because that's been manipulated by a central bank through, remember we talked about quantitative easing, which is colloquially it's money printing, and the more you print, the lower your long-term interest rates, which incentivizes people to borrow, spend, consume, borrow, spend, consume. It's a crazy business model. It's trying to have infinite growth on a finite planet.
I think it's an interesting theory that goes around that any young 30 under 30 that appears on the Forbes cover has ended up being a fraud or fighting some sort of case, and I think it's venture capitalism where there's no due diligence done, it's just money being thrown at.
So I think a venture capitalist will probably disagree. I'm looking for the venture capitalist in the room. Where is he? There he is. I think they're probably, would you disagree with that? Do you do no due diligence on your deals?
I think it depends on where you're investing in. If you're investing like pre-seed and seed,
Yeah.
I agree it's more about kind of management team and
Yeah,
funding.
yeah.
If you're investing like Series A and beyond,
Yeah.
it's more about numbers and
Yeah.
cohort analysis and
Yeah.
churn and retention.
Yeah.
But I think one thing that I can also add to the kind of the view of VCs being very short term is like they're jumping the latest trend. So one thing that's kind of sadly is really popular right now in VCs is defense tech.
Yeah.
So investing in like drones and basically like companies that will go on to kill innocent people in
Yeah.
Asia and Middle East.
Yeah.
And so
It's not a morally driven industry. It's an industry purely driven by, well, not purely, but I think you make a fair point that there is a lot of sort of jumping on the bandwagon. You know, one year it's the word blockchain, the next year it's the word Web 3.0, metaverse, and now it's all AI. And they're just jumping on the latest trend, which is partly driven by investors. So I am being unfair, and it's, you know, I completely appreciate there is a huge amount of work that goes into what you do, and there is due diligence that takes place, but the incentives are wrong. And the incentives are not your fault. The incentives are because we have fiat money, and it's printed at will, and it's manipulated by governments. So, you know, governments are causing inflation by printing money. And it means that we really want to throw money at bad projects. And that isn't our fault as financiers. That's the fault of the system that we're in. Yeah. We talked about the magic money tree, this idea that governments print at will, quantitative easing. We talked about what is sound money. Definitions of sound money, anyone?
Tangible, fungible, anything what fits the characteristics of money used in the real economy. And I like an example would be like Bitcoin or gold. I know it has intrinsic value as well.
So I disagree. I don't think there's any such thing as intrinsic value. And we use the example of a glass of water in the desert, which has a lot of value. If somebody gave me diamonds in the desert, it's not worth anything to me because I'm dying of thirst. So I need something that will keep me alive, and water would be much more valuable to me. So I don't think there's a concept of intrinsic value. People say, oh, the dollar has intrinsic value because it's backed by the US government, which it isn't. It's backed by the threat of military violence is the reason why dollar has value. And, fiat money doesn't intrinsically have any backing or undertaking. Many scholars are wrong about this. Scholars say, the pound and the dollar are backed by something. But again, I'm going to refer you to the quarterly bulletin of the Bank of England 2014, quarter one. The Bank of England itself recognizes that it has no intrinsic value. It says it's not backed by the government, and if a shopkeeper wishes to refuse your £10 note, they're at liberty to do so. There's no legal reason for them to take your £10 note. So you're right about fungibility you mentioned. I think the biggest one is decentralization. And that, because decentralization means your money cannot be manipulated by a small group of people. So if you have a form of money that's accepted, so go back to 700 years of the Islamic dinar, you now have Arab and Persian traders coming down the Silk Route all the way from China into southern Europe. They're bringing with them ideas. They're like management consultants of their day. They're bringing ideas and techniques. They're inventing new ways of financing, of transferring value from one place to another. They set up funduks, which are trading houses along the route. And at each funduk you have effectively bankers, if you like. You have this hawala type money system where they carry suftaja, which are like travelers' checks. They're, what would you call suftaja? Letters of credit, perhaps you could say. The word sukuk, which means Islamic bond, is the plural of the word sak. The word check in English comes from sak. So many things that many people believe was invented in Florence and Venice and southern Europe. The banking system of Italy was actually, its genesis was in the Arab and Persian traders coming down the Silk Route, bringing in these concepts that were created through ijtihad, based on the ethical principles set in Quran and Sunnah, and then reformulated and codified by scholars like Imam Abu Hanifa. So you ended up having these instruments to finance trade down thousands of miles into southern Europe. And now today, the world says that capitalism was invented in southern Europe, whereas I think that actually many practices from 1,000 years ago at the time of the Islamic dinar are actually the origin story of modern capitalism, except that modern capitalism has gone in a completely different direction now, where it's not merchant capitalism, it's financialization. So it's no longer trade, it's riba. So sound money is money that can't be manipulated, is not controlled by a small group of people, it's decentralized, it can't be manipulated. Some people will say it requires tangibility, something real. So they'll say only gold can be sound money because it's a commodity that you can see, touch, and feel. I disagree. I don't think there's anything, there's no scriptural evidence that money requires to be something that you can see, touch, and feel. And the famous hadith about money should be handed spot, hand to hand, mentions 6 types of money: gold, silver, wheat, dates, barley, salt. That doesn't mean those are the only 6 types of money. Some people seem to think that's only money can be that. Therefore, gold and silver are the best types of money. That's not what that hadith means. It means you must exchange it hand to hand. You can't defer it. You can't, It can't have riba attached to it, excess of money on money. And actually, there's no evidence that money cannot be digital. Money can be digital. It has existence in the form of digits in a computer. And in fact, in the case of Bitcoin, it is backed by something, which is energy. It requires energy to be extracted, and it requires energy to maintain and secure the network. So I believe it actually does have some backing, if that's a criticism. What else? Is Bitcoin halal? Do we think it's halal? I've obviously given you lots of propaganda on it.
That's a loaded question,
Yeah,
isn't it?
it is.
Say, is it halal?
Yeah.
Asking us.
Well, let me ask a question. What evidence is it there that it's haram?
There isn't. There can't be.
Yeah.
Unless you can attach it, back projection, to something in the Quran, Sunnah, and it's the heart of the scholars.
Yeah.
Yeah, so that's why it's a farouk. It's a farouk. It's a not a Suli question. It's a question on interpretation of the scholars.
Yeah.
So that's why when we say this in halal, it's reminds of the internet.
So again, maybe the question is better framed. Is it haram? Or what evidence is there that it's haram?
Maybe that's a good one.
Yeah.
I don't know.
Yeah. So I think that scholars in general are basically 10 years behind. You might be aware, I think I talked about this last week, you might be aware of a recent fatwa apparently from Mufti Taqi Usmani, although in fact I believe it's again one of his students, rehashing an old fatwa, rehashing the one from several years ago, in which a student again wrote on behalf of Mufti Taqi Usmani. It wasn't Mufti Taqi Usmani himself, I believe, who declared it haram. And the reasons are again factually incorrect. I do find it frustrating that scholars have, very senior scholars, have taken it upon themselves to issue rulings on this, sometimes not directly, sometimes through their students, without considering the facts. And the first one I remember from about, I guess, 10 years ago, famous scholar in the UK who did a very long diatribe about why Bitcoin is haram. Literally not literally, but almost every sentence in that 16-minute video was factually incorrect. He talked about governments backing fiat currencies. He talked about intrinsic value. He talked about used by criminals. He talked about not being real. I mean, everything was just ludicrous, to the extent that you start to question whether these scholars are correct in other things that they talk about. Once you know your subject matter and you listen to the scholars talking about the subject matter and giving rulings to lay people saying, don't use this, it's haram, on the basis of incorrect data, you have to wonder, what about the rest of the stuff that I hear from him? Can I trust it anymore? It's a credibility issue for me. And I'm going to have to be careful on this, because last week, let me move on from this. Last week I talked about,
Sorry, just a question. Before you said people are sleepwalking into what's real money and what governments and those in power control. With the current state of the world's economy, and as things in the Middle East start to heat up again and things get more expensive, and a potential another financial crisis, do you see things getting so bad that a civil war could break out in the West? And one example I give you, the Arab Spring. So I'm Tunisian, and it started in Tunisia, where, just for anyone who knows, basically a guy selling food on a cart was told by the police he can't, and they beat him up. He burnt himself, and he died in hospital a few days later, and then the Arab Spring started there. We talk about that happening only in the global South, but now inflation is not under 10%. There's no way that anyone can honestly say inflation is less than double figures per year. And things getting worse, and people waking up slowly. Because do you think things are going to get so bad that, or are we just going to continue sleepwalking, and when the government says jump, like they did in COVID, we just do it? Lockdowns, masks, vaccines, we just And I know that I could.
So I'm getting into dangerous territory now because you want me to come out as a conspiracy theorist, and you know I already hold fringe views on finance, but I'm in a sense I'm well equipped to hold those fringe views because I was an insider for such a long time. So people can't point to me and say you don't know anything about this industry. Actually, that happens to me. I mean, I see some comments on social media, trolling me saying, well, I have a degree in economics and I'm telling you this guy is wrong because I have a degree in economics. He doesn't know what he's talking about. Actually, this is how money creation works, and then talk about modern monetary theory. And so that's the Dunning-Kruger effect, right? So when it comes to finance, I know my onions, I've worked in it, I understand how it works, I'm a former insider, and I can get away with having a sort of semi-conspiracy theory and talking about the matrix of finance and so on. When it comes to geopolitics, I have no expertise. So you're now asking me to speculate on, is there going to be a civil war? I don't know. Yeah, no, I don't know, maybe. I'm sure there's people in this room who are better qualified than I am. Do I have a personal view on it? I believe in diversifying my portfolio, not having all my eggs in one basket. And that means that I'm hedged against financial Armageddon. And I believe gold and Bitcoin are those two hedges. So I do, whether or not it happens, I think the focus for me is protecting against a black swan event. A black swan, by its definition, we don't know what it is. We don't know when it will happen. We don't know how it will happen. But a black swan is one of those outlier events that we should protect ourselves against. So, to a lesser degree, it's things like Trump, unilaterally announcing tariffs all of a sudden, and the market's falling by 20% in a day or whatever the number was. It could be the 2007-8 global financial crisis. It could be something else. We don't know. But when it happens, we'll be unprepared, unless we have, metaphorically stocked ourselves with guns and ammunition and tinned food and whatever. But now I'm going down into the crazy theories, and I don't want to go there.
Yeah, but I think the point is so for you, it's Bitcoin and gold are two of the assets that help protect against potentially something like that.
Yeah. How tough?
Saying that, is there not a correlation between geopolitics and Bitcoin?
There is, 100%. Yeah, I mean, there's no doubt that money is politics. And the relationship between state and money is very powerful. And I would like to break that relationship between state and money. I don't think states should have the power to control money. And Bitcoin is the poster child of decentralization, of not being manipulated, of not being in state control. Then there's the counter argument, which is, well, what's happening with BlackRock and Goldman Sachs and all these people? They're starting to create ETFs of Bitcoin. And I say, yeah, that's a double-edged sword, because on the one hand, it creates a retail FOMO. And people say, oh, look what's happening. Maybe we should get some of this Bitcoin ETF. And the Bitcoin price starts rising. And, Coinbase starts backing itself with more Bitcoin. And, there's a general price effect of that. But on the other hand, if you're a maximalist, you say, hang on, we don't want one organization or a small number of organizations to, quote unquote, control Bitcoin, whatever that means. And so there's a balance there. I'm not quite sure what the balance is. I'm in two minds when I hear the Trump administration talking about, remember they talk about crypto, and I'm very much against 99% of what goes on in the crypto world. And they talk about Bitcoin as well. I believe they're building Bitcoin strategic reserves. Many governments around the world are. And it's a good time to, because there's been a price drop recently. So it's intrinsic. Geopolitics and money are connected. So to some degree, I have to have a view on geopolitics, but my view is very much scenario analysis. If scenario A happens, what will happen? If scenario B happens, what about the scenario I can't plan for, the black swan event? How do I hedge against that? So that's how I tend to view it. And now we are living in very turbulent times. All sorts of macroeconomic events, geopolitical events, war, conflicts, ideologies in conflict with each other, incredibly rich and powerful people in the world like Musk who are amplifying misinformation, amplifying lies about us, and that's a very dangerous time for everybody. So there's no one single solution.
Wall Street, I read, is manipulating the price of Bitcoin already. through paper trades and shuffling.
I'm going to ask Michael to answer that question.
Aren't they?
So the question is, Wall Street is manipulating the price of Bitcoin.
My answer would be that no, they're not, but equally they could probably manipulate the price of something. But someone could also manipulate the price of gold, and they have done historically. But that doesn't take away from the monetary properties that that particular asset has. What you don't want, I agree, is that it's a double-edged sword, is that you definitely don't want a scenario where a few small entities hold the majority of the supply and can do those things. But ultimately, one thing to remember is actually the majority of Bitcoin is still held by individuals. 60 to 70%, I believe, the number is that, is held by just individuals, normal people like us, holding it themselves. So we have far more power in that network than they do. But it is all speculation as to whether they are manipulating the price. Lots of people would say that they are. I would argue that they're not.
Right, so I ended up with this conclusion that I thought that the Islamic finance industry could potentially be saved by this sound form of money, and because it was an anti-riba form of money, because it couldn't be created ex nihilo from nothing, because it was not created out of debt, because it was therefore anti-inflationary, and I contended that there was something prophetic about it, the ideals, the economics of it, because it's low time preference, because we are people who invest for the akhirah, not for today. So in theory, we should be people who shun mindless consumerism. So if we have an economic system that incentivizes us towards mindless consumerism, because it's good to borrow today, spend today, and consume today, what if we had an alternative economic system that didn't incentivize us to throw money away all the time? My father's generation was a generation that used to fix everything. You know, if your TV went on the blink, he tried to fix it. You know, he would build things himself at home. He would do DIY at home. Now, if something goes wrong, we chuck it all away and start again. Again, this is trying to create infinite growth on a finite planet. It's not sustainable. I talked about disciplining one's ego. In Ramadan, we control the nafs. Sabr is one of our most important and valued characteristics. And I also talked about the hadith about free markets. Remember I told you about when the people approached the Prophet ﷺ, he was asked to control the prices, fix the prices of commodities, and he refused to do so because it would create a great injustice on the people. We talked about risk sharing in the real economy, how financialization has meant that the banks make money simply by printing and therefore by lending. So this idea of fiat, of debt, of inflation, of riba is all intertwined. And we've moved away from the real economy towards the financial economy. We don't value trade, we value financial pieces of paper. We don't share risk, we have this asymmetric relationship. The sanctity of property rights, per the last sermon. We talk about freedom from state interference, the separation of state and money. So Bitcoin was a natural conclusion for me.
Just one more thing on Bitcoin before we move on. There's a lot of talk about energy and how much energy and carbon it uses. It does use a lot, but I did some research last week.
Good.
And roughly 52% of all of the energy used to power Bitcoin is renewable.
I think it's more than that, actually.
17.
Yeah.
Is it 70?
Yeah.
I think it's 50. That might be a couple of years old, but I think what I want to say is the fact that it needs a lot of energy. If we take Bitcoin out of it for a second, we need a lot more renewable energy, and this is pushing us to create infrastructure.
Yes,
that's
it
what
is.
Renewable energy
Yes.
is. It's infrastructure that's needed. So that is a much more positive thing for kind of the
That's what economists call a positive externality.
Exactly.
We didn't think about this before, but actually Bitcoin is encouraging us to go green.
Correct.
Yeah. It's actually nudging us in that direction. Yeah. That's a good nudge. And the other thing is, what's bad about energy usage? Why is energy usage bad? We're human beings. Our civilizations have progressed because we've used energy. And we've created electrical grids, and we've created transportation systems, and we've created buildings with air conditioning, and Sure, there are good uses of energy and what some people may think are bad uses of energy, but this is all subjective, right? Is YouTube a good use of energy? I don't know. Is the fashion industry a good use of energy? By the way, both of those are much higher energy usage than Bitcoin. Do we think it's good or bad? For some people, it's good. If your job is you're a video game designer, then presumably, video games are a good use of energy. But if you're a parent of a child who's spending just gaming until 3 in the morning, then maybe it's a bad use of energy. It's completely subjective. Yeah. So this idea that Bitcoin bad because of energy usage, that's stupid. That's just a stupid way of looking at it. Because energy usage is entirely subjective.
Yeah, exactly. So, I mean, we all need energy, and the fact that it's pushing us to make
good forms,
energy infrastructure is,
yes.
I think, a really good positive
Yes,
thing. So.
I agree. Absolutely. Very good point.
We talked about Bitcoin being limited supply, it's restricted, it's decentralized. And this question is really coming from the ignorance as well. But think around a man on the street, he wants to buy a bag of pita bread. How much Bitcoin you pay? This limited supply. How does this become a medium of exchange? How is it anti-inflationary in a sense? Because we have needs, demands, and I think it's in human nature to want more and more, and it goes down, going down fundamentals. But how does this all work?
Yeah. So you can argue that gold is a good example. Gold has a mostly fixed amount in the ground. I mean, we discover new reserves every now and then, but we're only extracting at the rate of 1.5% per annum, right? So it has a high stock to flow ratio. A lot of stock, small amount of flow. So that's an example of a type of sound money. And that means that throughout history, the price of goods and services, and we're going thousands of years back, the price of goods and services remains relatively stable. So the weight of gold that you need to buy a unit of livestock, a sheep or whatever, 1400 years ago is not massively different from the weight of gold to buy the same livestock today. Now, that tells us that gold is anti-inflationary. So any form of money that has a high stock to flow ratio is generally anti-inflationary. So when you have an inflationary money that you can print at will and create more of it to, as economists would say, to deal with economic shocks, what governments will do is they will use it to finance war and white elephant projects. So again, the moment that Nixon depegged from the US dollar, depegged gold from the US dollar in 1971 was the moment that the US started a perpetual state of war and have entered into 250 conflicts ever since. So when a government knows that it can exhaust the money of all citizens everywhere, in the case of the US, it's effectively everywhere because most trade in the world is transacted in US dollars. When they know that they can manipulate the US dollar to go to war everywhere in the world all at once, they will exhaust all of our wealth everywhere. Whereas if they have a fixed amount of money and they can't print more of it, they're only going to do what's within, wars become contained. That's what governments use fiat money for, primarily. So this idea that, we have this one entity in the world that is the standard bearer of freedom and democracy and human rights, it's literally the exact opposite. Any more questions on that point? Yeah.
I'm sorry, a layman is, from a layman's point of view, you said earlier that money can be printed infinitely, potentially, because it's just numbers and digits. And now you're saying, from my understanding is, at one point it was pegged to something tangible.
Yes, so pre-1971, the US dollar was actually, to gold.
So there was a limit.
Yeah.
Because it was tied to how much.
And the reason why Nixon depegged it was to finance the Vietnam War.
Yeah.
Yeah.
And then they could detach themselves from that.
So now you don't have any basis for what the dollar means. The dollar can be worth anything you want it to be worth. Yeah, yeah.
Another layman question. Is that why they're so desperate to have this conflict in the Middle East, because the petrodollar is very vulnerable, or the concept is?
So I'm out of my area of expertise here, so I need to be very careful. And geopolitics is not my area. But I will say that petrodollar is one of the world's 2 greatest trades ever created. So remember I talked to you about this idea that the US has been extremely clever in establishing dominance over the world through its currency. And one of the ways it does that is it says, I'm going to buy your oil. You have the largest oil reserves in the world. I'm going to buy it from you. And I will only pay you in US dollars. That's the only currency we can agree for me to buy this oil. So that's why we call it the petrodollar. But because there's only a finite amount of this dollar, what I'm going to do is I'm going to ask you to lend me the money to buy this oil. So you, who are the producers of the oil, are going to lend me that money. How? I'm going to print US treasuries. These are bonds that the US government prints. So now you're going to buy this, you are going to buy these US treasuries from me. Effectively, that means that I am borrowing from you to buy your own goods, your oil. And the great thing is, I can print the US dollar forever. I'll keep devaluing it over time. So I effectively never have to pay these bonds back. It's an infinitely printable trade. I'm effectively getting my oil for free over the last 50 years. It's an insanely good trade. Of course, if you refuse, I'll invade you and assassinate your leaders. It's as simple as that. It's happened all over the world. Central and South America, the Middle East, everywhere in the world. There's, and you can read up on CIA coups all over the world. There's a great book, by the way, Confessions of an Economic Hitman. I forget the author's name, but Confessions of an Economic Hitman talks about a CIA asset who was placed in, if I remember correctly, it might have been Nicaragua. Where was it?
Oh no, that was me.
Oh, sorry. It was it was somewhere in Central or South America, and it describes how the US manipulated other nations to effectively do a similar type of trade. It's very clever, but it's completely imperialistic.
John Perkins.
Ah, yes, that's it, John Perkins. Yeah. Anyway, right. Right, we're going to move on a little bit now because it's already 10 past 11. So we did touch on this idea of what Islamic banks do in this country and why I believe that they've failed the communities here. And we talked about how 23 years ago, 22 years ago, when Islamic Bank of Britain was set up, the idea was to allow local communities in the UK, Bangladeshis in East London, Pakistanis in Bradford, all of the diaspora and British nationals, British Muslims to have access to financial services, mortgages, savings accounts that were Sharia compliant. And so the IBB was set up. Since then, post I guess in the last 5 years or so, IBB, which is now called Al Rayan Bank, has stepped away from that retail base of customers and is now, as I said, mostly they seem to be servicing Gulf nationals instead. Gatehouse Bank is the alternative. Gatehouse Bank also provides home financing and presumably term deposits account. I'm not sure, to be honest. You know my criticisms of banking in general, because it's fractional reserve, because it's money creation, because it's not based on prophetic ideals. And the numbers bear it out. British Islamic banks have made a cumulative profit of £31 million over 20 years. That's an average of 39 pence per person per year, which is, by the way, they're a monopoly. They're a monopoly. They'd have no competition. It's easy. There's 4 million Muslims. It's easy for them to make money out of us. But we recognize something's not right. And we don't use their bank accounts. We don't use their mortgages. And many people I meet say, yeah, I had a look at Islamic banking, but it didn't make any sense to me. It didn't feel very ethical or Sharia compliant. Say if you have a question.
Do you know the story of, like, I think, did he say it was the Bank of England chairman who had a Bangladeshi
Yes,
neighbor?
governor, yeah.
Didn't someone tell him that we as Muslims can't use fractional reserve?
So it's a very good question. Safer saying that the famous story of Eddie George, the former governor of the Bank of England, who lived next door to a Bangladeshi, who said, I can't finance my house because my faith doesn't allow me to enter into a contract which has riba. And Eddie George started this process of investigating what is Islamic finance, what is Islamic banking, and helping to set up the first Islamic bank in the UK. And then Saif was asking the question, why did nobody tell him that fractional reserve banking by its nature is haram? I think the reason is because we come back to this concept of the matrix, that we all live in this system that celebrates financialization and celebrates investment bankers and private equity people and venture capitalists and the financialization of the economy and the proliferation of debt services. So we never really stop to think from first principles, like, is this wrong? Is there something wrong with what we do? So again, I use the example of the Martian landing on planet Earth and looking at what banking does. And if you go back to the 16th century, the goldsmith is storing bags of gold in his vault and he's handing out more pieces of paper than he has bags of gold. And people are not questioning this. And eventually the government is saying, yeah, this is perfectly legal, by the way. Hey, from now on, we'll call you the Bank of England. And you're allowed to give out more pieces of paper than you have gold in the vault, because people are not coming back to redeem their gold. So we're already creating a fraud on people. But none of us have sat back. This is why I think the study of, Zaki, you're doing engineering, mashallah, at Cambridge. So I studied physics at university. I knew nothing about finance, nothing about economics, nothing about the real world, by the way. When I did job interviews, I was hopeless. I had no idea what business was, what industry was. And I think we as a community need to get financially literate, even though, how many people here are from Woking, by the way? Hands up, who's from Woking? Oh, that's not a bad, about half of you are from Woking, half of you from outside, which is good. I'm glad to see that, because I feared that the local community would not come. And I really want them to skill up in this area. I really want them to understand from first principles, what is finance, what is money, is what we're doing collectively, is it halal? Is there something that we can do better? Can we affect change ourselves? Or are we too small, too insignificant to actually make a change? What can we do to make change? We'll talk about that in a minute. So, sorry, I'm rambling there a little bit. I've gone off a little bit off topic, so I'm going to try and get back on topic, and then we'll come back to that point. Sorry, was there another question there? No. So we talked about the Islamic banks, in my view, failing the Muslim community. I think some of the reasons for that is a lack of cultural affinity. The people who run the Islamic banks are nothing like us. They don't share our values. They don't know who we are. They'll call me and say, I'd like a meeting at 1 p.m. on a Friday. I'm like, mate, what universe do you live in? There's clearly a lack of technical expertise. They will, if they watch this, they're going to get furious. But they simply do not understand from first principles what Islamic finance is or how it works. They're retail bankers from a conventional background, and they're mates with the FCA and the PRA. That's why they're chosen. They're chosen as a safe pair of hands to guide the bank through regulatory processes. That's it. So it's banking by another name. It really is no difference. And that's why when there's no other game in town, sure, it's better to use the devil you know than the devil you don't. So we go with Islamic banks and we use their mortgages. I don't want to create an injustice on people. People say to me, oh, Haris, thank you very much. You're opening my eyes. I will never take an Islamic bank product again. That's not my intention here. I don't want to prevent you from existing, from living, from having a roof over your head. I don't want to prevent you from doing that. So please don't go away and say, he told me it's haram, I mustn't use it. That's not what I'm saying. What I'm saying is just think a little bit about it. If there's alternatives that you believe are better, choose the alternatives. I've talked about FIDA as a great home financing system. Yeah.
What's causing the Islamic banks to be fractional reserve banks?
Because they have no choice. Because the regulator and the government says, in order for you to be called a bank, B-A-N-K, these words mean something, but this word means something specifically. You must be a money creation institution. You take in deposits and you're allowed to lend out more than you have in deposits, so you created new money. That's the definition of a bank. If you don't want to be a bank, you can be a non-bank financial intermediary. That means you focus on a specific product like home financing. But then you have effectively 100% reserve, which is perfectly acceptable. Now you have a pool of money and you can only use that pool of money to finance an asset. That's the basis of trade.
Why don't they just do that?
Because they're commercially hugely disadvantaged by doing that. Yeah, it's a commercially huge disadvantage. You're incentivized to be a bank or to try and get a banking license because it's literally a license to print money. It's literally there.
I guess it's also that you don't have FCA protection as well, if I'm correct?
Yeah, so if you're not a bank, you are not authorized by the PRA, and that means that you don't have the advantage of the Financial Services Compensation Scheme, which I think is now £120,000. Yeah, okay. So that's gone up a little bit. So I'll have to check. I might be wrong with FIDA, for example. If you deposit your money as being the pool of investors who finance the houses, I have a feeling that they're not covered by the FS. I don't want to get this wrong. So if someone knows better than me, please.
Just lender status.
Yeah.
They don't deposit.
They're not part of the protection scheme. Okay, which is a shame, right? So they're disadvantaged.
Residential, so FIDA is a wholly exclusive residential lender.
Yes, yes.
So they will most likely have some other protections involved.
Right, okay. Yeah, so they're commercially disadvantaged. That's why people would rather be a bank.
Isn't there also a story of a couple of organisations who applied here in the UK and the US to be a fully reserved bank?
Yes.
An actual bank.
Correct.
Full reserves.
Yes.
They rejected them.
Yes.
They deemed them a risk.
Correct, yes. If you're fully reserved, people think there's something very risky about you. And you would be if you followed the same due diligence process that banks do. So I have many years of doing sukuk transactions, Islamic bonds. And when you arrange a sukuk transaction for a client, it's usually either a government or a very large corporation. The DCM bankers, debt capital markets bankers, they don't really do any fundamental due diligence on the company that they're financing or the government. They just look at your credit rating. So there's these organizations in the world called ratings agencies. You may have heard of them, S&P, Moody's, Fitch. And these organizations look at the balance sheet and they say, we think you're a AAA rating. That means very highly rated, very, very low risk, very highly rated. Or you're, triple B, which is considered below investment grade. In other words, quite a lot of risk. And if you have quite a lot of risk, the interest that you pay on a bond will be high. If you have very low risk, the interest that you pay will be low. And so these rating agencies are organizations that kind of vet your balance sheet and say, good credit or bad credit. And the bankers will really do very little due diligence. They'll look at the financial statements, the balance sheet, the P&L, the cash flow statement. They'll say, yeah, good, bad, here's our interest rate. There's no real fundamental they don't sit on the shop floor of the company and talk to the finance managers and look at the process on the conveyor belt and where does every penny that comes in and where does it go out, and they don't do any of that, right? When you print a bond, you're just looking at a rating and saying, right, there we go. Again, I've gone off on a tangent there, so I'm going to try and come back on. Right, let me not dwell on this too long, otherwise I'm going to get sued. What direction should the industry take? Yeah. Again, I'm showing you this diagram of the global north with its hand on the global south. Can't see it very well, which is in chains. Islamic banking, as I've said, is very much about reverse engineering conventional debt. It is debt-based, it's fractional reserve, and it relies on money creation. So obviously I have a pretty negative view about it. Again, I don't want to prevent people from using it because it may be the only option in town. And so that might be the only way that you finance your house or you have term deposits or whatever it is. But realize that there are alternatives, and we now have these new Islamic fintechs, which, as I've said, are young, dynamic, entrepreneurial people who are solving a specific problem. So the guys who set up FIDA set it up because they couldn't find the solution to home financing that accorded with their ethical principles. So they are solving a specific problem. Are they risk sharing? Are they prophetic in their ideals? Will they repeat the same mistakes? That's my fear. My fear is that we have a number of new Islamic fintechs that are essentially replicating the banking model. And they're taking credit lines often from conventional banks. Sometimes they wrap them up in this. Do you remember I talked to you about contractum trinius, the method that financiers used in the Middle Ages to circumvent the church's ban on usury? Well, we're doing that today with Islamic finance because we use this commodity murabaha or tawarruq transaction, which, at least in its individual contracts, is perfectly Sharia compliant. But when you put them all together, you get the duck walks like a duck, quacks like a duck, it is a duck. So are they risk sharing? Are they prophetic? I mean, I kind of split it 50-50. Some of them are trying to think from first principles and create financial instruments and products and services that are true to the risk-sharing characteristic. Now, I have to be careful on this. I was at a workshop a couple of months ago where someone in the room accused me of trying to be more pious than everybody else, which I thought was bizarre. Did I talk to you about this previously? I did, yeah. And I thought it was a bizarre statement. Like, why? Well, it says, well, you're all fixated on this risk sharing. Where does it say in Sharia that you have to be risk sharing? You know, we're allowed to use murabaha. We're allowed to use credit transactions in Islamic finance. We're allowed to have debt. I said, yeah, sure. We're allowed to. Doesn't mean we have to. Doesn't mean that's the only game in town. Doesn't mean that the only financial institutions that we set up are money creators who exist on fiat money and fractional reserve and create money from nothing. You're promoting that. By you promoting that, you are promoting an entire system that has enslaved billions of people. That's what you're doing. So I'm not doing this because I'm trying to be more pious than you. I'm trying to say, why are we not even considering risk-sharing principles? Why are we not even considering a symmetric relationship between the financier and the financee? Why is our default always to go for replicating conventional debt products? I thought it was a bizarre conversation, and I think it revealed a lot about Islamic financiers in general. I don't engage, apart from this one particular workshop and a couple of others, I really don't engage with the Islamic finance industry anymore. Remember that I'm an insider. I always want to emphasize this point because, again, people in the comments will start saying things like, I have an economics degree and this guy doesn't know what he's talking about. I've done this for decades. I've been on that inside and I've developed those products at the coal face. So I'm always going to argue from a position of strength on this, that the Islamic banking industry has failed our communities. It does not reflect our prophetic ideals, and its trajectory is one which merely expands the universe of conventional finance and increases oppression on the global south, increases the cost of living crisis by creating inflation through money printing that is sanctioned by the government. That's the problem with creating a non-bank financial intermediary that merely replicates what the banks do.
Just to clarify my understanding, I think your response to that individual around whether you're allowed to and should do, and around the topic of risk sharing, is it that about the unequal level of risk sharing, or was it the fact that Islamically you can't have a risk-free transaction?
So yes, you're correct. You can't have a risk-free transaction. You can't guarantee the return of capital. I think his point was more Sharia and fiqh al-mu'amalat specifically allows us to use different types of contractual structure. I may have a murabaha arrangement with you in which I say, I have bought a pen and I'm going to sell you the pen at a cost markup. That's a trader. I'm a trader. So I bought a pen for £10 in the market and I'm going to sell it to you for £12 in the market. Absolutely fine. There's nothing wrong with that transaction. I need to create a £2 profit. Otherwise, how do I exist? I need to have a profit in my business, right? That makes me a merchant. That's a true murabaha, right? That's a true credit arrangement. I can even sell it to you in installments. Like you pay me £6 now and £6 in a month's time. No problem. Halal transaction, right? The problem is that when we take these credit-like transactions in fiqh and we translate them into a banking activity and we end up replicating exactly the economics and the risk profile of a conventional mortgage or conventional business loan or conventional personal loan or credit cards or whatever it is, what's the difference? We just got some Arabic words in between. And it's an attempt to deceive God. What's wrong with us? You know, this is the reason why I don't interact with the Islamic finance industry. Why are we still shilling for conventional finance with Arabic words? That's what we're doing. It upsets me that still amongst our people, the Islamic finance industry is very much hand in hand with the conventional industry. You know, they don't realize that they don't actually have their arm around their shoulder. They're being pressed on their head down.
It's interesting you say that, because I think I read a paper on LinkedIn yesterday about Islamic finance and how the only people who benefited or profited it are the Islamic finance institutions. And then your previous slide talked about £31 million over 20 odd years, which is...
But remember that the management of those institutions got very well paid. What I showed you was profits. Profits is what after they pay away to their management.
Well, they talked about the fact that the British Muslim community has been disadvantaged by, I think, close to £70 billion worth of wealth compared to British Hindus or Sikhs who don't have access to the same products. So touched on home financing along with business financing as well, and so effectively the only people to benefit from Islamic finance have been the institutions.
Yeah, that's why they hate me, because when I call them out for this, you know, I'm basically blacklisted. I don't, you know, I don't interact with them anymore. Just fine. Right, what's next? Okay, yeah, let's talk about the key players. Do any of you recognize these logos up here? So we've got FIDA, Nesta, Kestrel, Wahid, IFG, CCM is me, by the way. Again, I'm not selling anything. I can't sell to you guys. Al Rayan Banking, Gatehouse Bank. Do we recognize some of these? I see people nodding. Anyone want to give me a quick summary of what each one of them does? You all know FIDA, so let's move on from FIDA. Anyone heard of Nesta?
I think Nesta's also for home finance.
Yeah.
If I'm not
Well, it's an investment company for investing in property.
Yeah,
so you earn an income, a rental income.
Yeah, so it allows people with as little as £500.
Yep.
So democratizing that.
Yep.
I think IFG now probably are called Curate.
So their capital arm is called Curate Capital. Yeah.
Wahid's a robo-advisor.
Yep.
The two below are traditional banks. Well,
yeah, Al Rayan and Gatehouse are the two Islamic so-called retail banks. Yeah.
I don't know Kestrel, but yeah.
Yeah. So and CCM is my own, which is I talked about this profit sharing instrument that finances companies on the basis of trade. Yeah. So that's what my company does. Yeah. Yes, that's right. Yeah. So there aren't many of them, and you know, it's quite a limited. I mean, the journey they've been on has been very interesting. Kestrel, I think, is a good example of that. A young guy called Arib Siddiqui met his co-founder at Cambridge University, and they decided that they wanted to set up an Islamic digital challenger bank. Realized somewhere along the way that it was a lot more ambitious than I think that they'd hoped for. Perhaps I hope I don't do Arib a disservice by saying that. It is an extremely difficult thing to do, and maybe, you know, everything was not quite as aligned, and so they pivoted. They became a wealth management app. They've enjoyed some success with working with some financial institutions to offer this wealth management service. So, you know, that's an example of an early stage success story. Nesta is a good friend of mine, Mohammed Paracha, is one of the most senior lawyers in the Middle East for Norton Rose Fulbright, and he co-founded along with Yunus Abadu Nesta to create as you say, an investment vehicle for property in the UK. Sorry, you had a question.
Kestrel pivoted again. They've just got backing from Maybank.
Yes, that's right. Yeah.
So they're more like a money app.
Yes.
Digital bank.
Yes. Yeah. So they've got a nice watermelon-coloured debit card, which is really clever, actually. I like that. Yeah. What else do we have? Wahid is a primarily robo-advisory, at least that's how they started. I think it's interesting how they've recently introduced this ethical screening for, I think, 2 of their ETFs. So this ethical screening, as I said, was to strip out those companies that have committed human rights violations. I really support that. I think that's a fantastic thing. One of the criticisms of the Islamic finance industry has been that these arbitrary financial filters that we apply to stocks, how come they don't look at good and bad actors? So it's really good that this progress is being made. And the 2 banks, Al Rayan and Gatehouse. Al Rayan, as I said, used to be Islamic Bank of Britain, and has somewhat become less focused of Britain and more for people who live outside Britain but come here in the summer and drive Ferraris around Harrods. Gatehouse, again, you know, don't really hear very much. Very focused on term deposits and... See, I don't even know. I mean, I should know, right? I don't even care anymore. That's how apathetic I am about what these guys do.
Just to add, I think it's nice to have the logos in the corner, Kestrel and CCM, because I think you touched on earlier the affinity to property. And a lot of these guys there, see the property, obviously you've got Wahid and IFG there, but I think it's nice to see the product pivot that Kestrel did and to give people options, to help manage their money as well.
Yeah.
So it's more than just.
So it's not just that. It's great that we have these new startups, and it's just wonderful to see how they're developing. And I love to see how Arib and Muhammad and others have developed and grown their businesses. I also want us to be really, really focused on financial literacy for ourselves. And again, I come back to this point that I studied a science degree, didn't know anything about business or finance, came to it rather late. So I left university and joined a consulting firm. Then a couple of years later, I joined an investment bank. And really, having now gone through that process, I realized that young people need to get financially literate from a very early stage. From your stage, I'm very pleased that you're 15 years old, and mashallah, you're asking me some of the best questions here. And that's something I wish all young people would do, because we are, as a community, and I've said this before, we're easily scammed, right? We've got lots of crypto bros running around selling us rubbish. And this stuff that I'd never even heard of before. What was it? Binary options. I don't even know what that means. And we're scammed easily on TikTok and Instagram. We need to get financially literate. Ideally, where we need to be is, my company needs to be made redundant, needs to not exist anymore. I'm sorry to say this to my friends in the industry, none of this needs to be necessary if we're all decentralized and self-custody and learn how to manage our own money.
On that, where we want education, the most frustrating thing is young people don't actually want education. So frustrating.
Is that fair?
Not specific to this young chap here. I'm in the property industry. I'm sick and tired of the Instagram bros and this, that. So I built an entire property investment course for free.
Yeah.
Right? Put out there free, let everyone know.
Yeah.
Nobody wants it.
No.
But these guys are on TikTok live for 8 hours a day, pushing their little courses with no industry expertise whatsoever. They're getting their sales. I'm like, hang on a second. So I've given away everything for free, but nobody wants it.
I know.
People don't value free. People don't value good intentions, unfortunately.
But by the way, there was a discussion that whether I should charge for this. No, there was. We had a discussion about, and I said, I don't want that, because I want the local community to come here. Really, I want them to. Sorry, and I don't mean to say that I don't value the people who've come from a long way today. I really do value you being here. But I think that we in Woking have a specific problem, and we have a somewhat closed mindset. And I'm a bit concerned about that, because if we want to be a powerful and influential community and not be demonized and marginalized in this country, we need to level up, and we're not doing that. And Abdul Rahim and I have conversations about this recently. We're very close-minded, and we've got to learn about what's happening in this country, what's happening in the world. We've got to get interested in geopolitics and macroeconomics. And I thought these were uninteresting subjects when I was a student. I thought, I'm just going to study my subject and that's all I need. And if I'm really good at it, then somebody will hire me. But nobody's going to hire you for that. You need to understand what's happening in the world around you. I thought it was very interesting, say, when you said some of the criticisms against Bitcoin, and you mentioned CIA, which is a great comment, because that reveals that you've done some deep thinking and deep learning about it. And what are people saying about this? Is it some kind of conspiracy that's been set up to pull the rug from under us? And we as a community are not doing that. We are not learning about how finance works, how the world works. Finance is just common sense, and it's just geopolitics, right?
We see other people do stuff, and they were like, I'm going to go do that now as well.
Yeah.
A chicken burger shop open.
Yeah.
Kind of like, oh, I see somebody else having success in this.
Yeah.
I'm going to replicate it.
Yeah.
Rather than actually innovating maybe a slightly different solution, a slightly newer solution, something better.
Yeah.
We're just hell bent on replicating the same thing the guy down the road did.
So look, I'm not averse to that, because Allah gives us the skills and the talent that we have, and we have to make the best of it. And some of us are destined to create new things. Some of us are destined, hopefully, to improve on what already exists. And we choose one or the other.
Just not the same smash burger. We could do better.
Question. In terms of education, I completely agree with you, and I'd like to think that I probably know more than the average person in terms of financial education, and particularly Islamic finance. With two questions. Where do people go for trustworthy educational resources? And secondly, when you brought up all of these companies, and the second thing is, with those companies, one thing I worry about, and I'm quite sure a lot of people here and a lot of others worry about, is with the new startups, so like the Kestrels, like the Curates or the IFGs, like the Fighters, I think people worry is like, you don't have the track record, but these guys do, and I don't think I can trust my money there. I'm going to put half of my wealth or a third of my wealth there. And I mean, how does someone properly assess how to properly invest and diversify? Because I think diversify, like me personally, I'm probably invested in 4 of those companies.
Okay, right.
As well as others.
Right.
To try and diversify, but at the same time, I spend a lot of time thinking, oh man, these guys have only been around for 2 years.
Yeah.
Is that 10?
Which is a very fair way to assess, where you're going to park your money, because I'm somebody who believes that grey hairs are very valuable in my industry.
Yeah.
And I would rather give my money to somebody who's been through multiple economic cycles. Exactly. And has experienced the ruble crisis in the 90s, or the dot-com crash of 2001, and the financial crisis of 2007. The further back you go, the better they get at their job. And so I'm with you that there's a trust deficit in our industry because it's so young. But I do think we have to patronize them to some degree. We need to put something there. Otherwise, they're never going to grow. Okay. And I also say that our financial literacy needs to get better, because as a community, we are not focused on this very well. And we're easily scammed by people, and we're overly exposed to property, and we leverage against property, and we get into crypto scams and all sorts of things. We need to improve our education. And that starts at school. That's why we need to do more stuff like this. Maybe we should have a class at Woking for young people on personal finance. Maybe that's something that we can think about. Altaf.
How long, sorry to put you on the spot, how long do you anticipate running?
20 minutes?
Can we have a quick break?
Yeah, let's take a break now. Yeah.
Can we not make it Woking and maybe just a little bit more central?
So, testing. All good? Yeah. Okay, guys, let's get started again. We're going to go through to 12, I think, and then we'll stop. And if people want Q&A after that, most welcome. So, I often get, this is the slide that I do for students. What can you do? What is there that you can do to effective change? And I always talk about striving for excellence, for ihsan. And again, I keep repeating this point. As a community, there's something about us that we're, in some senses, many of the problems that we have collectively are brought upon ourselves. And we can do more. We can strive for excellence. I think that having low time preference is a key part of that, sabr. It means investing in yourself. It means respecting yourself. It means being a strong Muslim man or woman. It means following prophetic tradition. In some senses, I think do something because it's hard, not because it's easy. Do something that no one else is willing to do, and do it really well. I find that in my own business, that everybody has their own job, their own role that they have to play, and it's my business. So unfortunately, I've got to also be the guy who makes the coffee and cleans latrines, right? It's having a nice title like CEO really means nothing. It actually means worrying about the boring stuff that nobody else wants to do. And people will not necessarily appreciate you for that, but it is part of who you are. And I often use that example of make your bed, because it's a cliche. But if you make your bed in the morning, you've done a really small basic thing, and you build on these little small basic things every day. And that's what makes you excellent in the end. Excellence is not about gambling on one thing and being brilliant at it, and everybody says, look at this guy, he's amazing. It's about doing the small things every day that eventually add up to the big thing. And I also tell people, just turn up. A, turn up, and B, turn up on time, because your punctuality is an indicator of your trustworthiness, of your reliability. So these are really easy things that students can do. These are really easy things that all of us can do. But they're things that we don't want to do, because You know, we're watching TikTok and we're not reading books. We're not having low time preference. We're getting quick fixes by 15-second dances on Instagram and TikTok. We're listening to people like, there was a crypto nerd, if you like, called Sam Bankman-Fried, who stole, how much was it, $16 billion in the FTX failure. And he told people that every book can be reduced to a 6-paragraph blog. Now, you know that this guy is an idiot when he says that. You know that. Anyone with half a brain cell, with any common sense, knows that's an idiot phrase. He might be super IQ, super intelligent. He might have made enough to be able to steal $16 billion, but he's clearly an idiot. So don't listen to people like that, because, you know, a categorical rejection of books suggests a major deficiency in your character. And nowadays we've got US college professors who are telling us that their students are struggling to read 20 pages for an assignment. Our attention spans have gone. Still, the best source of knowledge is ancient wisdom, and in our case it's Quran and Sunnah. There's no better source of wisdom for us. But for some reason we're just kind of moving away from these things. Anyway, sorry, that's really a more intended for my student audience. They asked me about careers in Islamic finance and where they can get experience. Well, unfortunately, this is not an industry with a lot of jobs. There's not a lot of jobs generally in the industry. We're in a stagnant point of the economy. And my starting point was in a field of investment banking called project finance. I'd come out of university and I started working in a consulting firm. I didn't enjoy it very much. I didn't feel I was learning very much. And I started reading up. I read a book called How to Read the Financial Pages. Literally, it was called that. It's a very good book. It taught me how to understand what's being written in the FT and in the business pages of broadsheet newspapers. And I started looking at this thing called project finance, and this was financing infrastructure and railways and roads. And I was worried that this is interesting, and it seems like it might be socially useful, actually, unlike the vast majority of the banking industry. But I'm concerned because it still involves riba. And I spoke to somebody in the Islamic finance industry, somebody senior at the time, and he told me, if you don't do this thing, you will never learn how to change anything. So do it. Now, in my case, it happened to work because I also believe in this concept of keeping your eyes on the prize. What is it that you want to achieve with your life? Do you want to remove yourself from riba, and do you want to help other people remove themselves from riba? And if you have your eyes on the prize and you acquire your skill set and then you leave and then you build your own thing, I think that's a noble pursuit. Unfortunately, I sometimes get misconstrued when I say this to people. Sometimes when I say to people, you need to understand your enemy and you need to lie in the belly of the beast for a while to understand it, they say, oh, you've taught people to go out and work in riba and become a banker. That's not actually what I'm saying. I'm saying for many people, they won't have this mindset of, I will go and work in the industry and I will move away from it. For most people, they end up being in there for 2, 3, 4 decades and they will never leave, and it's golden handcuffs. And they're well paid to do these things. So you need to understand your own mindset. Is your own mindset, I will get my skills in a particular discipline. And by the way, it doesn't need to be finance. You can be an expert in marketing. You can be an expert in the law. You can be an expert in coding. Whatever your field of expertise, have ihsan in it, have excellence in it, become the best at it. And then you will find opportunities in our community to come together. Now we are starting to develop the ecosystem and the infrastructure and the networks where we come together. We have a circle called Bitcoin Majlis, where we kind of it's just a few of us, we kind of sit together and chat things Bitcoin. And I think that's actually a very healthy dynamic, right? Because we're bringing together like-minded people who want to collectively create excellence. We have this thing in our communities where tall poppy syndrome, one poppy rises above the other, and the rest of them have to cut this poppy down. Why are we not doing that? Our Muslim pound is not circulating within our communities. The Jewish community does that very well. Why don't we do that well? You know, we're not supporting each other. So I hope that initiatives like this one, like others, will help us to level up and will help us to find opportunities for us to work together. And for those who are looking to make a move into Islamic finance through the Islamic fintech firms, again, these are very early stage, they're very small. Maybe there's, in some cases, a trust deficit, maybe the credibility is not quite there. I often tell young people, after when you graduate or when you're doing your apprenticeship, find the best company you can work for. As blue chip as you can get it. Learn your skill set, acquire that skill set, but keep your eyes on the prize. Remember that you're learning this skill set for a specific reason. And that's for the pleasure of Allah. And sometimes the pleasure of Allah is just because we're doing a job that is putting food on the table for our families. Sometimes it's because you're doing something, grand. You're creating a new ecosystem for Muslims to transact in a halal way. Something that's, sounds a bit more glamorous. But one is not better than the other. Just putting food on the table itself is a noble pursuit. And to do that with ihsan is something that we should all do as a community. I may be laboring this a little bit, so let me move on. Where can I learn more? I put this up on the screen a little bit earlier. I noticed that some of you were taking pictures of this. So there are some books up on the board that you can read. I also mentioned John Perkins, I think it was, Confessions of an Economic Hitman. I think that's quite interesting. Scholars, you can go the traditional route, or you can go the young scholar route, the modern tech-savvy scholar like Mufti Faraz Adam, I think writes very well on complicated subjects. He's recently written a 124-page paper on crypto and Bitcoin, immediately in response to that. Gotta be careful with my words. To the fatwa from one of the students, Mufti Taqi Usmani, and it's very nuanced. You may not agree with everything in there, but where it's coming from a position of strength, somebody who understands the space very well, is very highly qualified and credible. And sometimes when you read the older scholars, again, there is credibility. They're very highly qualified and they're very well respected in fields beyond just finance. But I wonder sometimes whether they really truly understand the modern monetary system, the modern financial system, how cryptocurrency works, how technology works. And unfortunately, and I get into trouble for this, I have to be very careful. I don't want to disrespect what they do. It's an essential service for all of us. But I do like us to think from first principles. I got into trouble for claiming that scholars had prevented us from using the printing press, and claiming that scholars had prevented us from using swords on the battlefield instead of guns. Okay, there is a nuanced discussion around those two things. And there were other reasons, but potentially, why we use swords instead of guns that were not necessarily in all cases related to what the scholars had told us. Similarly with the printing press, there was a tradition of information, of oral information dissemination, and maybe that's why it was frowned upon to use the printed word from the printing press. There was a reason why rulers, the Ottoman rulers, didn't want to use the printing press. So it's not a blanket statement. I'm not saying that in all cases, in the case of taps for doing wudu, in the case of using loudspeakers in the mosque, in the case of citing telegraph poles near the mosque, in the case of using television, in the case of using cryptocurrency and Bitcoin, there's all of these examples. But often scholars have prevented us from going that next step because they want to evaluate and they want to analyze and they want to sit back. And I feel sometimes we retreat too much into our ivory towers. And we all have brains. we can all think about these things for ourselves. And we can all evaluate many different, we shouldn't have to go to one scholar and say, this is my scholar, and whatever he says is the gospel truth, right? We have an opportunity to learn from many different sources. Right, let's start wrapping up, I think. Okay, Muslim Bitcoin Summit. Michael here is from Bitcoin Majlis. And we're going to be holding a conference in October, 10th to 11th October. 10th to 11th. Yeah. You want to talk to us about this?
Yeah, I can give a bit of an idea.
Yeah, give us a minute or two.
Although although I will fail to do justice to the...
Can you do that?
Yeah, do you want to come up front? Yeah.
Sure. Assalamu alaikum.
Alaikum salam.
I mean, I'll fail to do justice to the...
Sorry, can you speak in the mic?
Oh, yes, sorry, yeah.
Yeah, I'll fail to do justice to the subject any better than Brother Harris will when it comes to Bitcoin, specifically Bitcoin and Islam. But we are running the Muslim Bitcoin Summit in October. It will be the 3rd edition of this event. The first two were in Dallas in the US and had great success. Local communities kind of came together to really understand this topic a bit more. And what can you expect from it, really? Well, thankfully, alhamdulillah, for this event in October, we've got a really good group of individuals coming together. Brother Harris is there to even kick us off for the day, so you can kind of know what to expect. But we've got industry insiders from Islamic Finance, we have scholars, and we have people who are really building in this ecosystem. So this is not kind of a talk about investment and financial gain. That's something we definitely stray well away from. What we're trying to help our ummah understand is how we can harness what we believe is a tool, a monetary tool, that is far better aligned to the principles of our deen than the money that we have available to us now in the form of fiat currency. Something that, as you now know, over the last few sessions here, is rooted in riba at its core. And this has compounding consequences that seep into every corner of our lives. And it makes it very difficult to conduct ourselves financially, economically, and even societally in a way that we're taught to, and to uphold the institutions that we're taught to uphold. And what we're looking at now is how can we begin to harness something that we have here before us and start to actually build circular economies, start to build alternative institutions upon these new rails. And that's what the discussion is about. So what you'll get is very much a refresh of these core principles that you will have learned a lot about over the last few weeks. But on top of that, you'll be hearing from people who are building, looking at how we can design these institutions of the future, how we can benefit from it today and start building for tomorrow, and how you can start using some of the tools today. Because I appreciate it can be a bit scary and a bit off-putting to think about, especially Bitcoin. It seems a bit different. People worry about things like volatility. They worry about how it can be used day to day to just live your life. And these are all the things that we're looking to cover over that weekend. And it will be a 2-day event. The first day is open to the general public to just learn. And the second day as well is equally, it's open to the general public, but a smaller allocation of tickets. But it's for anyone who wants to really get a bit more hands-on and actually start building with these tools, maybe start using them in your own lives, in your own businesses. So that's what we'll be covering. And it would be great, inshallah, to see some of you there.
Thank you so much, Michael. Appreciate that. That's really it. So just want to say thank you from me. Jazakallah khair. I really appreciate you guys coming down. Many of you came from a long way away. And for those of you who have managed 4 weeks, well done. I appreciate I rehashed many things over and over again. Some of it was not fresh today. Today was about consolidating. So again, Jazakallah khair. Have a safe journey home. I'm open for any Q&A now for, let's say, the next 45 to 50 minutes. If people want to stick around, I'm happy to do that offline.